Okay, very good morning to everyone. Tuesday the 8th of August. Getting the briefing underway. And first of all, a quick look at the close last night on Wall Street. No surprise, the S&P 500 up just marginally on what was a particularly quiet day in the marketplace, so up 0.16% in the S&P. Just to give you the latest stat, that's now a record daily run of less than 0.3% moves in either direction. It's now 13 days since we had a larger move using daily data dating back to 1927. It's now 73 trading days since the S&P has increased more than 1% in any one day. So if you're talking about that consolidation phase we were saying about yesterday, and extrapolated by the fact that we're in the midst of the summer season now, coming up to mid-August, this then finds it quite easy to see why the VIX has been at these historically low levels, this kind of lull in activity at the moment in the VIX index. Another stat for you in terms of the Dow, and it continues this fairly one-dimensional but albeit very gradual climb on the upside. We've managed to maintain this move, obviously the break towards the end of last week on 22,000 in the Dow, and the Dow has now rallied for 10 days in a row. If you're taking it to yesterday's close, that's 605 points. A sequence of gains has extended to 11 days. So if we were to see another up day again today, it would be the first time 11 days higher in the Dow since January of 1992, if that was to occur. To give you a bit of an idea. As you can see here, we're basically flat in terms of the Dow future. The S&P relatively similar. Has found a bit of resistance from pivot here this morning. Did see though, as you can see, defined by that candlestick there, a bit of a decline at around 2 o'clock last night. We did see a little bit of movement in a negative way in the Asia-Pac markets emanating from the latest Chinese trade balance. So let's kick off things and let's have a look at that, where growth in China's exports came in last month at the slowest rate since exiting contraction in March, so earlier this year, with the rise in the value of shipments to most major trading partners decelerating markedly. You can see here, it's what we're talking about at the beginning of the year, imports and exports really, and those first 2 months when we were at the peak, and we're continuing to move back in towards the territory of flat in those readings. And from an actual percentage point of view, exports year on year 11.2% below the expected 14.8%. Imports 14.7% below the expected, I think it was 22.6%. So a little bit softer there. Did create a little bit of weakness at the time of release in the Shanghai Composite. However, it did see a bit of recovery as the session progressed. But certainly it's not had much of a ramification read across into the market prices for this morning. As you can see, the DAX is relatively unchanged, an incredibly tight range really yesterday, with not a great deal in fundamental news and economic data to inspire. But looking at where we trade at the moment in the DAX future, we are coming up to the higher bound of the range that defined yesterday's price movement, or for the larger part, that being at 12,249.5. So worth keeping an eye on that. Obviously, any break above there, you got pivot sitting at 262, just above. Looking elsewhere, more broadly, Treasury is pretty flat, but gold is up marginally. Just having a look at the gold chart here, you've got the overnight high that we're seeing. This was a little bit of movement. You can see here this negative reaction to that Chinese data. We just saw on the S&P futures chart, saw a little bit of a dip in tandem with the slight decline in Asian indices. And then gold seeing a little bit of a rally, only about $4 or less than that, $2.50 or so. But that did define the overnight high in the Asia-Pac session. And we're sitting just below there at the moment, or just looking to come up to test it. So again, another level just worth maybe just keeping a bit of an eye on here in gold. I know that Michael, one of our gold traders here, was just looking at a key level here. I'm just sharing it with you now in my gold chart. This was the triangle he was looking at a 5-minute candlestick time frame. So you can see here we're just testing the upper bound of that triangle at the moment. So maybe just worth keeping an eye here. Potential break could be on the cards technically there. But you'd be wanting to see a bit of a follow through, more possibly in a negative read across from some of these other assets to really fuel a bit of a flight to quality move if that was going to occur, but technically a pretty decent level and worth keeping an eye on. The other product has seen a bit of movement this morning, and it did really just come about 25-30 minutes ago, is crude oil. We have a combination of different factors here, both technically. We broke yesterday evening's high, which was at 49.43. The spot went through 49.50, and then there was a fundamental catalyst to spur that initial break, which is likely exacerbated then by that technical breach. But looking at the headline that came out, it was a Reuters source. State oil company Saudi Aramco will cut crude oil allocations to its customers worldwide in September by at least 520,000 barrels per day. It's according to an industry source familiar with the matter. When that came out, that was around the beginning then of this last little push higher that we've had. However, after a run up to around 49.60 type level, we have pulled back slightly at the moment. Now, there are some other headlines to be aware of with crude oil, which doesn't make this an outright runaway bullish story. And that's because yesterday, in the briefing at this time, we were talking about the Libyan Sharara oil field, which had at the weekend come offline because of protests at the particular field. Well, that situation has had an update, and the update being that essentially production has now resumed. So production from Libya's 270,000 barrels per day Sharara field was returning to normal after a brief disruption when armed protesters broke into the control room. You know, can you imagine just working as an oil worker in one of these fields where you're just sat there quite happily chomping on your donut like Homer Simpson in your office of your petroleum station when armed protesters break into the control room demanding you shut down the field? You know, it's incredible the situations. And you know, I talk about this lightheartedly, but in a realistic way, the whole reason why Libya and Nigeria do not have a cap on their production as part of this predefined OPEC, non-OPEC agreement is specifically because of these reasons. Because Libya and Nigeria in particular have been kind of held ransom, if you like, to these types of quite hostile situations, which has impeded their ability to produce crude oil consistently. As such then, they're equating to a loss of revenue, and so fiscally they've had a real difficult time of late, and hence the reason why they want to ramp up production as much as possible, and why OPEC have been sympathetic to the fact that given those circumstances they've been allowed to do so. The question will be, you know, if they keep increasing output, you know, at what point does this come to the detriment of what OPEC's overall objective is the question. So a couple of things there just to be aware of, but crude, the more bullish factor of this latest Saudi source comment to cut crude allocations in September by at least 520,000 barrels per day, maybe just winning at the moment. If we continue to move any higher, then you've got the high from kind of the reopening of electronic trade from Sunday night, 49.73 there, and then the targets above there would be then eyeing R1 and then the $50 handle, which was where we just got short before we petered out on that move kind of mid last week. Talking of, I guess, sticking with the commodity theme of geopolitical news, just to give you the latest updates on North Korea. So this is what happened yesterday. North Korea vowed to inflict a 1,000-fold revenge on the US as it condemned the latest UN sanctions on Pyongyang, saying it would never give up on its nuclear program. This followed the UN vote at the weekend, of course, which backed the strongest economic sanctions yet on North Korea. This is what, I'm sure you would have seen Trump couldn't help but tweeting and how great a deal that was. Elsewhere, though, overnight, now this isn't surprising commentary because it is part of Japan's annual defense white paper, so it is a scheduled release. But essentially, Japan has upgraded its official warning on North Korea, saying that the threat had entered a new stage and that the regime may have already acquired the ability to militarize nuclear weapons. Now, I think there was... I was off last week, but on the Friday just before being away, I remember I was lecturing and I came back. And I think there was a headline at the time where it was just a rogue headline on the newswire saying that North Korea had fired a ballistic missile and it had fallen in the economic kind of zone or territory of Japanese waters. And I remember a lot of the new trainees, the interns, got caught out just thinking that that was an opportunity that would create a flight to quality bid across various assets. But what we've come accustomed to, obviously, is the fact that we must be, I think now, nearly getting towards 20 or so missile tests that we've seen from North Korea year to date. So obviously the frequency of these types of situations is increasing. And I would say what you need is a real escalation. Now from here, what you really need, to put this more simply, is for it to impact the market is a more targeted type test, I guess, from Korea, where it's specifically targeting, and if it was to hit land mass of any sort, then that certainly would be the type of escalation that would create a move at the moment, because the tests, they all land in the sea at this present point. Whether or not that's Japanese waters hasn't, or seems to be now, priced in. So these types of headlines, I think, are worth monitoring from a geopolitical viewpoint, but I would say unless that type of latter situation just discussed occurs, then really it's not going to have much of a pronounced move on the market, but it's something to always just be aware of in the background. Quick look at data. We have had some numbers this morning where German trade and current account surplus grows in June. Falling imports helping bulk up Germany's trade and current account surpluses in June. We've also had German industrial output, though, for June, minus 1.1%. Expectations were for plus 0.2%. But looking at the charts this morning, this is not really being too much factored into market movement thus far. Looking at the currency pairs, both euro-dollar and cable seen marginally positive amid a slightly weaker dollar. Dollar index down about 0.14%. If you look at the euro-dollar pair, that is, looks like we're just on a steady kind of rebound from that pretty sizable fall that we saw on the back of the dollar strength on non-farm payrolls on Friday. So we continue to just slowly claw back that significant loss at the end of last week. R1 providing a bit of near-term resistance here. If we were to get above that, then you've got the overnight high that comes in at 118.48.5. Then above there, you've got the lows that were seen back on would have been the 3rd, the morning of last week, to also keep an eye on before we then get towards R2. Likewise, as I said, with cable, marginally positive with a slightly softer dollar. Quite a difficult one yesterday. The markets were so quiet. There was it looked like a potential short opportunity on that break of 130.41. Let me just highlight that for you so you can see what I'm talking about. Was here, because if you look at it at the time, you had that previous support point back on Friday. That broke. You had quite a nice target to aim for as well with that short trade. Looking at, well, it would have been there was your target, 130.21. That being, of course, that previous low that was seen down on the 26th. And that would have been a 20 tick move in a fairly quiet day. Would have been more than sufficient. However, it just didn't have much legs in that move. It got down about a 10 pip break or so on that move, and then it just gradually recovered and very slow through the European close. Not really until Europe left the market and we went through the latter part of the US session, we just recovered slightly. So despite some of those bearish factors for the pound, obviously a lot of Brexit talk still in the press, talk at the weekend about this divorce fee materializing, £36 billion. We've not really had much development on that. Obviously the government's kind of not given any further clarity as towards that being an official figure, so worth keeping an ear out for any updates. But this whole consumer confidence getting dented, consumer confidence or spending diminishing, seems as well to be factored in to some degree. And one of the conversations I was having in the chat in the live room yesterday with some of the traders was about the fact that actually, you know, given the context of the weaker dollar, that seems to be a bit more of a driving force. And actually, despite the rally in the dollar at the end of last week on payrolls, I really don't see that weakening trend changing at the moment. And in the context, I actually think that once we, and inevitably we will, come to some agreement about the fee that will pay Europe to then secure this transitional and trade talks going forward, I don't discount the fact that we could remain at these levels in cable, if not move even higher, once that scenario materializes and we have clarity at least on securing the next few years on the horizon for these Brexit talks to take place. So although there's obviously a lot of negatives to focus on, the other big thing, of course, on the timeline will be UK inflation. That ultimately will be key. But I think as far as August was concerned, we had the Bank of England, no change, and likelihood is now that unlikely that people are going to be pushing in the near term for a hike. So yeah, pretty not too interesting at the moment in cable at this particular point in time. I guess we'd want to see a bit of a move on the downside through this, back through this 130 for it to become technically a bit more interesting. If that were to occur, then, you know, looking for the push back down towards the 20th when we were kind of trading a kind of 129.5 type level. Okay, quick look at the calendar for today. See what we got on the docket. As you can see, things are pretty quiet. We've already had that German kind of trade-related data that we've just covered. I've also had the similar numbers from elsewhere in France. But going forward into the afternoon, again, very quiet. This is the theme. Remember, we talked about this yesterday. Really, it's only US CPI, which is the big highlight from a US perspective from economic data. You've got various central bank speakers littered throughout the week, and then you've got a Reserve Bank of New Zealand rate decision midweek as well that might be of interest for FX traders. So again, when the calendar's light like this, you've just got to be factor this into your strategies and say don't get too greedy with your overall targets. Probably technical, more range type trades could be in play. Just as I've been talking, I can see that level we were just talking about in the DAX. We've managed to just break that. So yeah, that obvious target being a little run up here towards pivot on that break of the kind of range high that we had from yesterday. Nothing really too much fundamentally here to base this on in terms of the move higher, other than just it being technical more than anything else. But going back to the calendar, as I said, just be patient and realistic today. Likely to be possibly equally as quiet as yesterday, and this doesn't mean though that you might not get, you know, trading in these types of conditions can often offer you one or two excellent opportunities, even from a breaking news point of view, because when the market liquidity is very low, let's say you get a snap comment out of Saudi Arabia or something occurs from Donald Trump on a tweet, you know, the markets can move very quickly, and what you want to be is ready and positioned to take advantage of that type of move. So, you know, even though you can kind of relax, wait for the market to come to your predefined kind of technical points that you've identified, always be mindful though of these potential opportunities that may arise. Going back to the calendar in the afternoon, NFIB Small Business Optimism Index, that's really a non-event, as to as Redbook, which is a weekly figure. JOLTS And then you've got the API crude oil inventory numbers. As per usual, they'll come out later in the evening about 9:30. Okay, guys, that's pretty much it. That's your briefing for this morning. So any questions, of course, just let me know in the chat room. Otherwise, have yourself a good day. Thank you very much.